So yeah, basically we're just gonna go over back testing because this month I want you guys to start getting ready for your trading journals, trading strategies, and for that I need you guys to start learning how to back test. And back test strategy means that you guys basically have to know how to how to check if a strategy works and if it works for you because some people might like to take a different strategy than their trading plan. For example, some people that are swing traders probably doesn't get along with scalping strategies and vice versa. Some scalper traders or day traders, they don't get along with swing trading strategies. So in this video, I'm gonna teach you guys how to backtest any simple strategy. We have so far only talked about two strategies, basically breakout and retest, and the Fibonacci retracement, which we spoke about it last week. But in this call, I'm gonna teach you guys how to start backtesting your own strategy. So for that, you can go to tradingview.com, is basically where we do all of our technical analysis. Let me just put my microphone. So yeah, basically TradingView is where you can do all of your technical analysis. This is where everything is gonna be like happening in terms of at that like analyzing the markets. And for a strategy to see if it works, there's actually a button here that is it says replay. The replay button is basically it basically takes away the time of the chart up to a point where you want it to set from. For example, if I want to see what happened on Friday from last week, I can just click this button and then I just can cut it like that. And then I can see right here where it says the little select bar and the play button and the forward button. I play the forward button and I can see what the market tells me from Friday up to this day from the data that has been collected. So if you keep on clicking it, this is basically it's telling you exactly what happened and from Friday up to this day in a 4 hour time frame. So basically here you can check if a strategy works. For example, if I were to be trading, I don't know, for example, break and retest, this will be support. I would take a trade after we broke above this resistance key level and this one as well. So I would take a buy. I would take a buy right around here. Stop loss under the support, uh, under the resistance, a little bit under, and I would aim for previous highs, which are these. So basically, here on the bar, you can actually play it. For example, you can click forward, and you can see if that strategy is profitable. As you guys can see, boom, it works. So that's one way to check if your strategy works. So look, basically it worked. And basically, it's like if you have been in the real market, but with a strategy that now works. Now let's try and see if it works on another time frame, like on another time zone. For example, let's say that we want to test the strategy here on Monday, October 29th. Okay, so I'm gonna click the bar play button right here where it says select bar, and then I'm gonna cut it from right around here. And I'm gonna do the same thing. I'm gonna see the breakout strategy. If it works, we have the support of the trend line, the resistance, my bad. This is the resistance. We are basically on a bearish trend line, and we wanna see if we break above or we broke below this trend line. Let me just change the color just so it can be brighter. There you go. Okay, so let's say that we are in this bearish trend line and we want to see if our strategy of break and retest works. So I would aim to take a buy or a sell depending on how the market moves. Remember, you can never predict the market, you can always react to it. So I would put my resistance, and this would be my support. So basically, I would take a buy if it breaks above this resistance, and if it breaks out of the channel, which is this one, this little red line of the bearish trend line. So I would be taking the buy right around here. I would have my stop loss right under, need the resistance just in case the market doesn't want to play it my way and then I get liquidated. So I would target for these highs. And if in case it would have broke down to the downside, I would take my sell right under this support right around here. That's not it. Sure. So basically, this is my two scenarios, and I'm gonna see and I'm gonna target these previous lows. Okay, so this is just to see if your strategy works. So let's say that the market opens right now. So I will have to see how the market moves. So if I break out of this line, if I break out of this red line, or either to the downside, then that's basically if I'm gonna take a sell or a buy. So now I'm gonna see what the market gives me. Okay, as you guys can see, I already broke above this current trend line. So now I'm in a trade for buys, and then I'm gonna see how it goes. You see, take profit hit. That's one way to see if your strategy works. Basically, this is just called backtesting. Backtesting means that you are basically going back, as the title says, you are going back into the market from the data that has been collected, and then you basically test if the strategy that you currently have works or is profitable. So this was the second example. Let's give it just one more example. Okay, I'm gonna go right around here. And same thing here. If we are trading the breakout strategy, we currently have this trend line to the downside. It's a little bit tilted like this. We are very basically bearish. So after we broke above this current trend channel or trend line, I'm gonna take a buy, and if we broke below, I'm gonna take a sell. Okay, so let's see. Now that we have the channel, now I'm gonna look for my support, which is right around here. We have support because we have many touches here, and resistance. Resistance will be right around here. So after we break above, I'm gonna take buys, and after we break below, I'm gonna take sells. So let's see what the market gives me. So for sales, it would be right under here. My stop loss would be a little bit inside of this square. Basically, this is support and resistance key zone, and then I would target previous lows right around here. This would be my previous lows, and if I want to look for buys, I would click right here. I would take my buys right after we break above this resistance and this bearish trend line. And why? Okay, real quick, just to make you guys remember why after we break out of this channel, basically because if we are in a bearish trend trend line, if we break out of this trend line, basically it means that we are shifting our structure from bearish to bullish. So that's another confirmation of taking a buy, because if you notice, we have a high, we have a low, we have a lower high, we have a lower low, And we are currently forming a lower high right around here. So if we want to look for the lower low, we want to break above the support and then continue its trend up to the downside, like how it is. But if we break above, we would be targeting this resistance and this trend line resistance. After we break above, I'm gonna go ahead with the buys up to these previous highs. Because if we break above this channel and we break above this resistance, that means that we are free to go up to the next previous highs and then creating a new high shifting structure. So I would target these highs. Or actually I can even target these highs right around here. So let's see what the market gives me. I'm gonna go ahead and press it forward. Boom. See what the market gives me. Okay, now I'm basically in the trade. So let's see how it goes. Let's see if it plays out. It's moving slow this time, but it's basically working. So there you go. Boom, take profit hit. So you guys see how to backtest the strategy. This is basically our breakout strategy, basically what we trade every single day. And we did the Fibonacci last week. So basically this class is just gonna be about backtesting and how to start setting up with your trading journal. Okay, so you guys have any questions so far? Let me know if I can move forward. Let me know in the chat if you guys get it or if I can move forward. Okay. Okay, so now, no question, bro. I actually have to get going, but I'll watch the second half later tonight. All right, for sure, bro. I'll give you the recording after I finish editing the the call. So probably like around 9, I'm gonna be posting it. So yeah, for sure, bro. Take care. Anybody else have more questions? Glow or Rhino? Do you guys have any questions? Let me know. Let me know right now, just so I can answer you guys. All right, so I'm just gonna get going with this. So now I'm just gonna have you guys um work on your trading plan. Okay, so everybody's trading plan can be different. Everybody can have their own confirmations. Everybody can have their own type of entries because everybody is different as a trader and psychologically as a trader. Because I don't know if you have noticed, but whenever you are taking a trade, you kind of get messed up with your emotions because you think that the trade might go to the downside or it might go against you or anything regarding to that. It is playing with your emotions. So having a trading plan can help you avoid those emotions and having you stick to your trading plan and to your current analysis to see if it works. Okay. So for example, how to write your own trading plan. Basically, for my example, I only trade, like I said, like I said, these are my rules for trading. My trading plan is this one. My trading plan or trading rules are this. I only trade on market opens at 8:30 a.m. New York session. New York session. That's my first rule. I only trade when the market open. Okay. The second rule that I have is I have to check support and resistance from 4-hour time frame and 15-minute time frame. That's another rule that I have. Another rule that I have is I have to identify my current market structure. My current market structure and see if price is moving bullish or bearish. The fourth thing that I always look forward is a confirmation on the 5 minutes time frame. Confirmation. I have to see a big push momentum on price in order for me to take a sell or a buy. If not, I have to wait for structure to form before I look for a trade. So if I get a big push, what would be a big push for me for look for in the market? So that would be a bearish engulfing candle or a bullish engulfing candle. So bullish engulfing candle, bullish or bearish engulfing candle. So basically, a bullish or bearish engulfing candle is basically a candle form that is way bigger in size from the previous candle. For example, right here, if you guys see how this big bearish engulfing candle form, this is basically bearish because it's basically oversizing this previous candle right here. And the same thing about here. You see that we have a bearish engulfing bearish candle, and then we have a bigger bullish engulfing candle, and then following up with another bullish engulfing candle. So three formation of candles of the same momentum could actually mean that the price is about to move to a certain direction, in this case to the upside, because even though if it's not a super huge candle, its price action is showing you that it wants to continue to the upside because it keeps constantly forming candles of the same momentum, which is bullish in this case. So you see we have a bullish engulfing, bullish candle, and bullish candle, then some small little bearish candles, but they are so slow, they are so small that the next one it comes out so big. So this case scenario, this would be a bullish engulfing candle because it's way bigger. You get me? So I would look for those in the 5-minute time frame. So yeah, where's mine? Okay, so in my case scenario, these are my trading rules for trading. So, but you can always look for your own. And how can you do that? You have to go to backtesting. That's why I just show you guys how to backtest your strategy. For example, if you feel like trading around 8:30, it's not for you, then maybe you should try waiting 5 minutes after the market opens and let it calm down for a little bit. Or you can actually trade pre-market, which is 5 minutes before market opens. You guys can figure this out by yourself to see what works for you guys the best. like I said, my trading plan is always 8:30 a.m. New York session. And for me to take an entry, I have to identify support and resistance and look at my current price action to see if my market structure is bullish or bearish. After I identify that, then I go into the 5-minute time frame and then I look for small confirmations for me to take either a sell or a buy. And I'm gonna give you guys an example real quick. So let's say that we are right here where I drew the little square right here. So I'm gonna go here, I'm gonna select bar. So as you guys can see, we were trending bearish, but now since we broke above this resistance of the trend line, we broke above. Now we are kind of shifting structure. As you guys can see, we are shifting structure to the upside. So now we are no longer in a bearish momentum. We are consolidating out of the bearish channel. So now that might be one confirmation for me to see that we are no longer bearish. We might shift the structure to the upside. So I would take buys. That would be one confirmation to see my current market structure. Now I'm changing from bearish. It might want to change to bullish. So let's see how it goes. I'm gonna go to the 15-minute time frame. Oh no, remember, always check your support and resistance on the 4-hour time frame and the 15-minute time frame. So I'm gonna go here. I see that we have support here, support, and then we have support resistance right around here. Well, it would be right around here. Okay, so I'm gonna go to the 15-minute time frame. And see, this is the little square that I created with the candle. And see what the market gives me. Okay, so I see support right around here, and then I see price that is kind of respecting this point and treating it as resistance. So I might want to take a buy after we broke above this resistance, or I might want to take a sell after we broke below the support level. Okay, so now let's say, for example, that I'm currently in my trading plan. It's 8:30 a.m. New York session opens, market opens. I have already identified my support key levels and my resistance key levels. I've already identified my current price action, which is not longer bearish. Now we are kind of shifting structure to the upside. So I'm gonna see if I go for longs, for buys instead of shorts. So I'm gonna give it my final thought of, let's say, for example, that I want to take a buy right around here after we broke above this resistance, and then I'm going to target previous highs, and then I'm going to have my stop loss right under this little support, you can call it, right here, the price formed right around here, just a little bit under, just to see if it comes under lower than this, then that basically is saying that the market is saying that my prediction is wrong, so my operation did not work. So okay, that happens too. It can happen. So that would be my buy scenario. And if I want to look for my sell scenario, it would be right under this support. So I would be taking sales right around here. Same thing with my stop loss. I would have it right above this little support line, because if it goes above that, it basically means that my prediction is wrong. And so it might want to come back to the downside. So let's see which one runs first. I'm gonna go click here. And then there, that is a perfect example. Sheesh. You guys see that push? That is a bullish engulfing candle. Do you see how quickly it formed? It's basically telling me that market just want to keep on going up. So I'm just going to target way above here, and it's going to hit because we have such a big push to the upside. This is big momentum. So let's see how it goes. Sheesh. It almost took us out. Thing looks nasty. There you go. Take profit. You guys see? For 1 pip, take profit hit. It almost took us out. This is basically liquidity because we have such a big push that a lot of buyers thought we were gonna keep on going to the upside. So what did the market do? Boom. It was trying to liquidate us, but it didn't get to our stop loss. That's why I always have my stop loss right a little bit under previous price points, just so I can let my trade breathe, and then it can just keep on pushing. Because after we got to this point, price just started pushing to the way that it was firstly meant to go, which is take profit right around here because of the big push that we had. So yeah, that's basically how I trade every single morning. Do you guys have a question? Do you guys have a question on this? Let me know in the chat if you guys have a question on this. At the moment. You, Gustavo, do you have any questions? Let me know, bro. Let me know. I'm here to answer you guys. So I want you guys to get like a good understanding of this. Good. No, I for sure. All right. So yeah, basically this is how I do it. I'm just gonna look for another example just one more time for the sake of this class, and then I'm gonna call it a day, and then I'm gonna let you guys back test on your own to find your own strategy. So now I'm just gonna do it one more time, the 4 hour. I'm going to I'm gonna move way farther, right around here. Okay. So right around here. So here, I'm gonna give you guys an example of two strategies that I currently do. One is basically the Fibonacci. Fibonacci retracement basically is a retracement in the market, but that's just for swing traders. So basically, Fibonacci, I already explained in last class, is basically we are measuring the retracement of price, and after it gets to this certain level, we can go up to the upside. So this would be the perfect entry for my Fibonacci key level. So I'm gonna see if it respects my trading plan on my breakout strategy, because remember that these are my trading rules. So not because we have a good retracement, that means that I'm gonna be taking a buy. I have to see that price actually respects my trading plan and trading rules in order for me to take a trade. So I'm gonna go back to the same stuff. Currently, I have to see what my market structure is like. So obviously, we are very bullish on this market structure. As you guys can see, we are moving way up to the upside. We are currently bullish. Okay, so we are bullish. Price is currently at a consolidation zone, as you guys can see. It's not breaking out of this box. So whatever happens after we break above or we break below, we are going to be taking advantage of it in the market with our breakout strategy. So in this case, I would do this. Follow my trading plan. Only trade 8:30 a.m. Okay, boom. Let's say that it's already 8:30 a.m. Let's see what the market gives me. I have to check support and resistance on the 4 hour time frame and the 15-minute time frame. So on the 4 hour time frame, this is basically our support, and this is resistance. We have support and resistance. We are going to go to the 15-minute time frame and identify it there. I'm gonna make this a little slower. There you go. A little smaller. Okay, so now we have another trend line, which is apparently we are breaking above. We had a bearish trend line and price is actually breaking above. So this would be another confirmation for me to take buys. So I would take my buys right after we broke above this previous resistance that the market is making. This would be one, and this would be support because price is currently respecting the ski zone. So I would take remember guys, you can never predict the market, you can always react to it. So what do I mean by reacting? If it breaks below, even though I have a bullish bias, I'm not gonna be ignorant and just take bias because my bias is obviously showing bullish. I have to react to what the market is giving me. So if it comes even though we are bullish, if it comes to be breaking out of this support and then it shows momentum of bearish momentum, then I'm gonna take a sell too because I have to play with what the market is giving me. So in this case scenario, you always have to have two bias. That's why I always have two bias when we are trading live. Just in case, yes, we could have all the green flags to take a buy to go bullish, but if the market is showing you another side of the analysis that you might not have, you are not gonna be ignorant and only look for buys when the market is currently just dumping. It's just currently on a bearish side. So yeah, that's always that you have to look for, where you have to have your second scenario. Just in case a scenario A doesn't work, you have a scenario B that might want to play out. So in this case, we are breaking out of this channel. We identify support and resistance on the 15-minute time frame. Let's say that it's currently 8:30 a.m. So let's see how it goes. Remember, buys above here, stop loss right under the resistance key zone, and same for sells. Sells right around here. Boom. And a stop loss, the same thing, right above support. So let's see which one plays better. Let's just go to the forward button and see what the market gives me. So now the market is showing me that it respected support very well, and then it break above resistance. So now I would be saying I am in this trade because we are breaking above resistance. So let's see how the place goes. So I'm gonna take this out. I'm gonna focus on this and see what the market gives me. Just like that. We are currently in profit. This would be, there you go. This would be previous highs. Another previous highs would be another target. And my final target would be these previous highs. So let's see how it goes. Boom. Take profit smashed. That's basically how you trade. That's my strategy. That's how I trade every single morning. And it works. It works. You guys can see it. So now I can even target these previous highs and I know it's gonna hit because we are bullish in a US 30 on this case scenario. I know for sure it's gonna keep on going bullish. Let's see. Ooh, that was liquidity. It liquidated me and then it went to the take profit. You guys see? This is liquidity. That's why I have to give my trade, my stop loss a little space to let the trade breathe. But yeah, it is what it is. It liquidated us and then it went back to take profit. So yeah, that's basically how I trade every single day. And liquidity, does it take you out of the trade? Yeah, basically it did take me out of the trade because technically it hit my stop loss. So in this case, I would have just basically lost the trade. But in reality, we were just gonna go up to the upside. But yeah, I in this case scenario, I got greedy because my first analysis, my first take profit was right around here on this previous highs. And then I just decided, fuck it, I'm just gonna let it run up to the next previous highs. And what happened? The market saw that we were really bullish, and then it came back and liquidated us, and then it went right back up to where it was first meant to go. So yeah, that's liquidity. But that was because I got greedy in this example, because basically I had already hit my take profit, and then I was like, okay, fuck it, I'm just gonna let it run. And then boom, came right back to the stop loss, and then it went to take profit. That's basically trading. That can happen anytime. That's why you guys have to follow your trading plan, and you don't have to be greedy. You can't be greedy in the market. You cannot be like, oh, I should have hold the trade more so I could have make more money. It doesn't work like that, because now what happened, it went right straight to my stop loss. It took me out of the trade, and then it went right back up. So yeah, basically that's how it is. You guys have any questions? Let me know in the chat. Let me know in the chat if you guys have any questions. Or if you guys want me to give you guys another example, I can do so. Let me know. Everybody good? Gustavo, Rhino, Glow, you guys get this? Let me know in the chat. What if you put your stop on a little lower? Yeah, I honestly should have done that, because like I said, you guys have to give the trade enough room to breathe. So technically, if I was aiming for that many points, I would have had my stop loss right around here, but I got a little bit greedy. Like I said with you guys, I saw a big push up to the upside, and then it came back and liquidated me. But it happens. That would have been just one loss. But what happened on the fifth trades that we took right now, we were basically they were all hitters. So basically, we only technically in this back testing session, I'm gonna go back and see how many trades we hit and how many trades we lost. So basically, I'm gonna go out of this bar. So basically, these were all the trades that we back tested today. Which one was the one that it took us out? I think it was this one. I think it was this one. That one was a stop loss, one loss, but this one we win it as one. We win this one two, this one as well, three, and this one as well, four. So that would put us basically 4-1, 4 wins, one loss. If we are risking 50 points per loss, we would have been negative 50 loss, but plus 200, but plus 200 on the for the other four losses, we would have been up 150 points, which is profitable. At the end of the day, we are still profitable. So this is the point of trading. You are always going to have losses. You just have to have more wins or more ratios in order for you to keep being profitable in the market. What is that? Basically, points is these points, bro. Look, points is this. For example, right here, do you see that it says we are risking, for example, in this trade, we are risking, let's say 200 points. It says 200 points. Do you see this where it says stop 202? Those are 200 points that we are risking. We are risking 200 points to win 1,522 points. So basically, we are saying, okay, I'm willing to risk 200 points for in order to win 1,500. So that's a 1 to 7 risk to reward ratio because we are basically willing to risk one to make up for seven. If I hope you understand. If you know what I mean. Do you kind of get it or no? Yeah, I get it. Yeah, basically, I don't know how to explain it like more like mm, it's like let's say in this case you are willing to risk $1 boom in order to gain $7 because we are risking let's say for in dollar amount let's say that you are willing to risk $200 in order to win $1,500. So if it would have been come back to the stop loss, you would have lost $200. But since your trade and the execution was good, you hit it to the target, which was 1,500 points. So $1,500. So basically, that's what I mean by points. Points is basically how the market moves. Every point is data from the market, data collected from the market. That's why you always have these points, this measuring scale right here because it's measuring the current price and you are actually seeing the points. Because if you see that right around here, when we took the trade, the price was at 42,674. So after 1,500 points, that would have been 44,191, which is 1,500 points more than where we currently enter the trade. And where, let's say that right around here, we had it at 42,677. We are risking 200 points. So that would be 42,477, which is right around here, 477, which is basically what we are willing to risk in order for what we are willing to profit from. I hope that makes sense. I hope that kind of makes sense. Do you get it or not? Let me know. Okay. All right, for sure. So any more questions? You, Gustavo, any questions? Rhino, do you have any questions? Let me know before I finish this class. So yeah, I think that's gonna be it. I'm just gonna stop the recording and that will be it for today.